So good evening, everybody, and welcome to our. In your voice will be going off. Like, am I clear?
Yes, you are clear.
All right. So good evening, everybody, and welcome back to our class on market structure. All right. If you remember the last class we had, we talked about the different types of market structure, the uptrend, the downtrend, the consolidation market structure, where we mentioned that the uptrend comprises of what? Higher highs, higher lows, downtrend, lower highs, lower lows, and then the ranging of consolidating market structure, equal highs and equal lows. We also talked about the concept of protection and targeting, where we said that in the uptrend, the lows are protected, the highs targeted, downtrend, lows targeted, highs protected, right? So today we're going to continue from where we stopped in the last class, which is what we're going to treat. First of all, I want to mention something that I skipped in the previous class. You see, when this uptrend is moving, like when price is moving to the upside in an uptrend, right? It is called what? Expansion. When you see price going to put in a new high, it is called what? An expansion. You know, when something is what? When something is supposed to, let's say something is supposed to what? Have like an upward movement, right? And then it's having that upward movement. It means that it is expanding. It is going to the upside, expanding. But once it starts dropping against what it's supposed to do, right? It starts dropping. We call what? A retracement. Do you understand? So in an uptrend, you see this move to the upside when price is what? Going to put in a new high. It is called what? Expansion. This is called what? A retracement. Expansion, retracement, expansion, retracement. So the main moves in any trend, they are called what? Expansion moves. While the counter moves are called what? The retracement move. If you look at this now, which means that in a downtrend, the move to the downside is what? Is an expansion move. The move to the upside, since it's supposed to be what? A downtrend, is called what? A retracement move. Expansion, retracement, expansion, retracement, expansion, retracement. Just like that, right? So before we move into this thing, I want to emphasize on the minor and the sub-breakup structures. One of the very many issues that people have when it comes to market structure is the fact that market structure will not always be as neat as it is in this schematic diagram, right? You see the way that I'm mapping it up like this? That is not how you're going to see it necessarily on the chart. On the chart, it will be a bit more tricky than it is now. Like you can see this now as what I have drawn, but when you go to the chart, you see something like this, right? This is going to be how the move to the upside can be represented, and then you have the move to the downside like this. Like it's going to be way more. We just have a lot more things going on with it than how neat it is now on my diagram or my explanations, right? Now, this is something that you can have, which means that inside of all of, I told you guys that when price takes at an area of high or low, we have what? We actually have a break of structure, sorry, right? So which means that inside all of these legs that you see like this, there are many break of structures going on inside. Do you understand? Like if I have, let me give an example of what I'm saying. Now this is what I told you, that when price puts in what? A high and a low. Here we have what? A lower high, a lower low. We have a lower high here. We have what? A lower low here. Now let me mark out this particular price leg. This is this particular price leg here. Let's go to say the 30 minutes time frame. Let's go to the 30 minutes time frame and see what's happening there. Let me trace that. Okay, yes. Now you can see that on like the 30 minutes time frame, you can see that here now you have the retracement moves having what? Different BOS, and the expansion moves was having what? Different break of structures as well. But if you go back to the 4 hours time frame, it looks neater. It just looks like one move, right, on the 4 hours time frame. But if you go down towards the lower time frame, it has so many things going on with it. So this is to say that at many times that you have played break of structures maybe on higher time frames, on lower time frames, there are things going on inside. By inside, I mean internally, right? And that is where the concept of external and internal highs got bettered from, right? You can have price moving in an uptrend just like this, creating a series of lower highs and lower lows. And this particular price leg that you're seeing like this now, right, has a lot of things going inside, going on inside. Like this is what it literally looks like on a lower time frame. This moves to the upside, right? This is what it literally looks like on the lower time frame, right? As with internal break of structures. Remember that this is the external break of structure here. The point at which price takes out a previous high on a higher time frame, right? This is the external break of structure. But inside of this leg, you have too many break of structures going on. And this is one thing that confuses traders when it comes to mapping out structure. Mistaking external highs and lows for major highs, mistaking internal highs and lows for external highs and lows, or mistaking the minor and the sub break of structures for what? For major break of structures. Now, there are two types of break of structures when it comes to this internal movement. We have what you see people mark as MBOS, and we have SBOS. Now remember that BOS means break of structure, right? So which means that the MBOS is the minor break of structure, SBOS is sub break of structure. Now it's very easy. Remember that in an uptrend, you are anticipating that the main move in an uptrend is the move to the upside. That is the expansion move to the upside is the main move in an uptrend. The move to the downside in an uptrend is called a retracement move. Now, any break of structure that you see internally in an expansion movement is called a minor break of structure. Any break of structure that you see internally in an expansion movement, which means that all of those things going on the lower time frame, breaking structure on this expansion move, right, is going to be any BOS here is going to be called a minor BOS. But you see the retracement move on this downtrend, any break of structure going on here, we're going to call that a sub break of structure. So the minor break of structures are the ones on the expansion moves, while the sub break of structures are the ones on the retracement move. The same thing for a downtrend. When you have price being putting in series of lower lows and lower highs. Remember that we established that a downtrend is made up of lower highs and lower lows, because the new lows must be lower than the previous lows, and the new highs must be lower than the previous highs. So when you have price going creating series of both lower lows and lower highs, and you remember that since it's a downtrend, the expansion move is the move to the downside. It means that those internal break of structures, when you go to the lower time frame on this particular leg, this expansion move, that is what we're calling the minor BOS. While the ones on the move to the upside, which is a retracement move, are the ones we call the sub break of structure. So minor break of structures are just like internal break of structures. Minor break of structures are just like internal break of structures and expansion move. While sub break of structures are just like internal break of structures on a retracement move. The moves to the upside in an uptrend are called the expansion moves. The move to the downside in an uptrend are called retracement moves. The moves to the downside in a downtrend are called expansions. The ones to the upside in a downtrend are called retracements. So the BOS that you find internally in expansion moves, they are minor break of structures. Why the BOS that you find in The variables that you find in a retracement move, whether uptrend or downtrend, they're called what? Sub-break of structures, right? Now, in our last class, when I was talking about the types of market structure that we have, I mentioned that the lows in an uptrend are what's protected, while the highs are what's targeted. Now, I told you that there is something that happens in the market. As much as rules governs a community or a space, a space or a place or a country, whatever, there are still people that are going to break those rules, right? There are still people that would want to dare and break those rules. This means that as much as we've established that, okay, in an uptrend, the lows are what's supposed to be protected, which means that prices is supposed to go below them. There are new lows that would still want to dare to take out areas of protection, right? There are times you're marking out your market position on the chart, and then you notice that the price has gone below a previous higher low, creating a new low. Remember that in an uptrend, the new lows are supposed to be The new lows are supposed to be higher than the previous lows. Like here we have low one. Sorry. Like here now we have what? We have low 1, low 2, low 3, low 4, low 5, and low 6. I'll call this low 7. Now, if you look at this, low 2 is what? Higher than low 1, which is how it's supposed to be. 3 is higher than low 2, how it's supposed to be. 4 higher than low 3, how it's supposed to be. 5 higher than 4, normalcy. 6 higher than 5, normalcy. Now, imagine this scenario now. 7 went below 6, which is where the abnormality now comes in. It means that 7 has taken out what? 7 has taken out a protected level, right? The moment price goes below an area of protection on the charts, something has happened, and that is what we call a change of character. You see people name it on their chart as CHOCH, or you see people pronounce it as chalk, whatever. Why? It is a change of character. Imagine a case scenario whereby you have a very close friend, say a best friend or something, somebody that you're very close to, always there for you. This person is very loyal to you, right? Always, like, you need somebody to talk to, and what comes to your mind is let me talk to this person about this. This person is somebody that is very trustworthy. And then all of a sudden, this person switches, right? The person that was supposed to be there for you constantly is now the one, what people call, like, is it backstabbing or betrayal or whatever, right? The person is now, when you call the person to talk to the person is like, oh, I'm very busy, please, I'll call you back later. The person is now nonchalant. The person has completely changed from what you initially knew, right? Now, if you want to report this that is happening now to somebody else, you're like, that my best friend that I talked to you about, or that my babe that I talked to you about, that used to always show up for me this and this. This person has completely changed. Their character has changed. I don't recognize what this person is anymore. That is how it is on the chart. When the chart is moving to the upside, and all of a sudden, instead of protecting a level, it does it targets it. And you're like, fuck, this person has changed their character, right? So that is what the change of character on the chart looks like. When price moves from creating series of uptrend moves and decides to target a protected level. Even if you don't remember anything, just remember that a change of character is when price decides to target a protected level, whether in an uptrend or in a downtrend. So the moment that you see price take out an area of protection, what I want you to think that has happened is a change of character. Now, one mistake that most traders make when it comes to this change of character is that immediately they see this change of character, they want to start selling. If they're buying initially, they want to start selling. Now, let me tell you why they usually do this thing. You see, when the change of character occurs, let's say that price is buying, and then a change of character occurs, automatically, what comes to your mind is that price is about to change its trend. Majority of the time that a change of character occurs, it is because price wants to change its trend. So a change of character comes with, this is the word, unconfirmed. Unconfirmed means it has not been certified. Do you understand? A change of character comes with an unconfirmed change in the direction of price, which means that price may change or it may not, but it is what unconfirmed yet. There is something that we need to see before we agree that okay, price has finally changed its trend after creating a change of character. So a change of character usually comes with an unconfirmed change in the direction of price. So which means that if you have price coming in an uptrend, creating series of higher highs and higher lows, higher highs and higher lows, and all of a sudden price takes out of a protected level, a level that is supposed to be higher than the new low, price goes below it in an uptrend. What happens? A change of character has occurred. Now I want you to visualize this change of character as a break of structure to the downside and to the upside at the same time. Just like this. You can see here now, price took out this level, this low here, and went ahead to do was take out this high here, right? It took out the high and took out the low. That is what the change of character looks like. It looks like a break of structure to both the upside and to the downside. In the case of a downtrend, where you have price doing what? Creating series of what? Lower lows and lower highs, lower lows and lower highs. All right, this is what the when price is coming expanding, retracing, expanding, retracing, expanding, retracing, creating protected highs and targeted lows, and then you break structure to the downside and goes ahead to do what? To target a protected high. This is what the change of character looks like. I told you, visualize it as price takes out a low and goes ahead to take out a high. Right? That is what this change of character looks like. And this change of character comes with an unconfirmed change in the direction of price, right? Which means that there are high chances that price is going to change its direction, but you need a confirmation to now assume that, okay, price, or to confirm that price has now changed its trend. Meaning that if it was buying and you see a change of character, you would wait for a confirmation to now assume that, okay, you're no longer buying, you have to start selling. And that change of character is that confirmation is another break of structure. So after a change of character comes with an unconfirmed change in the direction of the market, right? But then if price creates another break of structure after creating that change of character, right? This is now your confirmation for a new trend. I hope you guys are following. This is now your confirmation for a new trend. So price is coming with series of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? And then takes out the protected level, creating a change of character. Now, when the change of character comes, when price is creating this series of lower highs and lower lows in a downtrend, what is happening here? Of course, you'd be selling, right? You'd have your sell positions and everything going on. But then the moment you notice that price has created a change of character, you'd pause yourselves. Because this has indicated that price is most likely to change its direction. But it is unconfirmed yet. Why is it unconfirmed? For those of you that are already trading, you would be used to what I want to talk about now, right? You would there are times you see something like this. I think this is like a traditional entry model for most traders in our demographic, right? If you look at something like this now, this is price creating a series of lower lows, lower highs, lower lows. I'm sorry, higher low, higher high, higher low, higher high, right? and then price takes out this level to mitigate this level, right? The moment price takes out this level, this particular low there now, this is what a change of character, whether you like it or not. But in this case, right, it is unconfirmed if it is for a new trend or not. Instead, what happens? Price takes it up and continues to the upside. So in this case, it was just a liquidity grab. Do you understand? Price just um set the level of engagement. We've not got into liquidity or engagement yet. So when we get there for delivery traders here, you understand it properly. I'm just trying to clarify it for other people here that are already right. You understand that when price takes out this level now, so long as this is a higher low, right? When price takes it out, it has automatically changed character. But then if price takes it out and continues in that same direction, right? Price can take it out and continue in that same direction. That is why when a change of character is created, you don't automatically assume that the new trend has changed, that the previous trend has changed. More like when price puts in that change of character, you don't automatically mark out a sell position and start selling just like this. Right? You don't automatically mark out a sell position to start selling because it can be the price is just trying to sweep that level to mitigate probably a demand below what and continue to the upside, and then you end up with taking losses, right? So change of characters should not be traded without confirmations of a new trend. Once you're riding a trend and you see that price has taken out an area of what, an area of protection, just wait for a confirmation to know that okay, price has what continued the new trend, or wait to see if it is just what price sweeping liquidity up an engagement level to continue that same trend, right? So back to what I was saying. So this is what the change of character looks like. It looks like a break of figure to the upside and to the downside at the same time. And you would need what? An extra break of structure after a change of character to confirm that price has what now resumed a new trend. So when this happens, automatically you are no longer selling. You now what you start looking for what for buy positions, series of what higher lows and higher highs. The same thing if it's in a downtrend, okay, just like this, whereby price is putting in series of what higher lows, higher highs, higher lows, higher highs, higher lows and higher highs, and higher highs, higher lows and higher highs, higher lows, higher highs, and then takes out a protected level. Now, when this happens, automatically what comes to your mind is that what there is an unconfirmed change in the direction of price. Now, what confirms it is when price goes ahead to do what? To put in a new low after that unconfirmed change. Price putting a new break of structure, right, now confirms to you that okay, price has finally changed its trend. So you're no longer looking out for buy positions. So now what we start anticipating what a start anticipating what sell positions, right? A change of character. It means that price is going to change its character from what it was previously doing to a new thing. Just like the friend that I illustrated with, that your friend that was like very good, this and that, and all of a sudden the person becomes nonchalant, unavailable, and all of that. The person's character has flipped, right? So if there somebody has changed their character, it means that they are no longer doing what they were doing before. They are now doing something different. Or if you have like that friend, that has like a very bad attitude towards classes, the person does not attend lectures or anything, and all of a sudden you see this person going to class every day, and you're like, Faith, you have changed though. Your character has changed. That is an example of change of character. It means that they are no longer doing what they were doing before. Price is no longer buying like it was before. It has changed its character to a self character. Then your friend is no longer having a lackadaisical attitude towards class. The friend is now serious. She's no longer doing what she was doing before. Price is no longer selling, it is now buying. It is no longer doing what it was doing before. That is what a change of character, a change in what you were doing. So let's look at chart examples to see on the chart all these things that we've been talking about. This is This is area with deploy on the 4 hours time frame. Let me see. Let me use gold. Okay, wait. Alright, this is gold instead. So this is gold on the 4 hours time frame as well. Let me go as way back as I can. Alright. Let's start from somewhere. Okay. Now let me show you guys some chart examples. Alright, so let's start from these lows. Now if you look at what is happening here, we had what? We had price create this low, which is what? A higher low. Now that low went ahead to create what? A new high. I want to mention something. If you look at what happened between this leg and this leg, right? We had what? We had multiple highs and lows in between. That is why I tried to talk about the sub breakup structures and the minor breakup structures. Now, if you look very clearly, this was the lowest point that price got to before this highest point. And this was the highest point that price got to before this lowest point. But in between, you can see what series of breakup structure. There's a breakup structure here. There's a breakup structure here. There's a breakup structure here internally. You see those breakup structures that are what in this particular price leg, this internal breakup structures you see here. They are what I call what the minor breakup structures. I think that the minor breakup structures are what in the expansion move. And since we're in an uptrend, the expansion moves are what the move to the upside. The retracement moves are what the moves to the downside, right? Which means that this breakup structure here now is what a sub breakup structure, since it's what moves to the downside, right? Sub breakup structures. But then what I want to emphasize on, right, that I said I wanted to talk about, if you look at this point, you would see so many lows and highs when you go to the chart to mark out the market structure. That's the truth. You would see so many lows or highs. So the question is now like, what is your valid higher low? Which one should you map out as the valid higher low? I want you to always, in every point, every case scenario, know that your valid higher low is the lowest point that price got to before putting in a new high. The lowest point before the new high is your valid higher low. This was the previous higher low at this point here. Okay. This was the previous higher low here. And then price went ahead to create this higher high. Right? So if you look at that higher high, this was the next higher low at this point here now. This one here was the next higher low. So if you look at, if you look at what is going on there, we had what? We had low one, yeah, and we had what? Let me take this off so that it doesn't confuse you guys. Okay, so we had what? We had low one at this point. This particular low here is low one, and this particular low here what is low two. So sometimes when you're mapping out structure, you'll be like, oh, which low should I use as my what? As my valid higher low. Remember, this was the previous higher high. Yeah. So we have this low here. We have this low before the new higher high, which is what? This high here. So which low should now be what? Your valid higher low. The valid higher low is the lowest point the price got to before the new high. The lowest point the price got to before the new high. In this case, now you can see that this is low one and this is low two. So when mapping out your market structure, it is low two that is going to be what? Your higher low. Because that was what? The lowest point before the new high. And continuing again, you can see that what? We had what? we had okay, let me do it one step. Okay, continuing now, you can see that we had what? We had this point. This was the next higher low, of course, right? Now we had this high here. Let me call that high 1. We had this high 2. We had this high 3 before price retracement to create what? A new low. So when you're now mapping out a structure, you ask yourself, here is my valid what? Higher high. Your valid higher high is what? The highest point before the new low. If you look at these 3 highs, you have what? 1, 2, and 3. This was the highest point that price got to before creating what? This higher low, right? So this is your higher high, this is your higher low. And this was the highest point that price got to again before what? Creating a new low. So this becomes what? Your next what? Your next higher high. Here you've seen what? You've seen a higher low, a higher high, a higher low, and what? A higher high, right? You'd continue again. You have what? For the next set of lows before the new high, price has what? Price has gone above this previous high now. Price has created what? A break of structure. So you ask yourself now, you say, okay, this is low 1, this is low 2, this is what? Low 3 before this new high at this point. So you ask yourself, you say, which of these lows are valid? Which of these lows is now my valid higher low? You will take what? The lowest point before the new higher high. That is what your valid higher low. So this is not your higher low, neither is this your higher low. Number 2, what is your higher low? Right? The lowest point before the new high. Right? And if you look at what happened after this, price went ahead to what? To take out our what? Our higher low at this point. The moment price takes out a higher low, what is it called? This was the higher low. The last protected level that price came to what? Price came to target. Price took out our protected level. In this case, I told you that immediately price takes out a level of protection, what comes to your head is that a change of character has occurred. Right? Whenever price takes out a protected level, what comes to your head is that what? A change of character has occurred. Right? And that change of character usually comes with a change in the direction of price. But it is an unconfirmed change in the direction of price. Which means that if you were buying, you're now anticipating to sell, right? Or if you were selling, you're now anticipating to buy, right? Now, if you look at here, we're initially coming with a series of higher highs and higher lows, higher highs and higher lows in an uptrend, and then this change of character occurs. I told you that it's going to go an unconfirmed change in the direction of price, which means that if we see another break of structure in the direction of that new trend, it has confirmed the new trend. And you can see here that what happens after price targeted a level of protection, it went ahead to create what? A new high at this point, and then created what? Another low. This was the point at which price did what? Price gave us our confirmation for the new trend. So at this point, you now know that, okay, the trend is now bearish. You're no longer looking to buy because market structure, price was coming what? In an uptrend, created a change of character, gave you a confirmation of the new trend with that change of character. Automatically, your bias has now switched to what? Has now switched to bearish. You're now looking out for sales. And if you look at what happened now, see, this was our lowest point before price created a new high. This was the lowest point before price created a new high, which is what? This particular high. But see that this is significantly the next high in this level. Now, I want to say something. If you look at this point, you had what? You had low 1, you had low 2, you had low 3, and you had low 4 and low 5 before the new high. There was even low 6, right? Before the new high. Out of all of these lows, the valid lower low in this case is the lowest point that price got to before creating what? A new high. So this is where you're mapping out as your lower low. And your Your lower high is the highest point the price gets to before what's creating a new low. This is what you're anticipating that price takes out this in a break of structure. So this is our new low at this point here, right? So this is a lower high, highest point before a new low. This is the next what lower high. This is what the next lower low. This is the next lower high. This is what the next lower low, right? And then we had what? We had another lower high at this point here before what? Before the next lower low at this point. Lower high, lower low, lower high, lower low, lower high, and then lower low. I really hope that my marking is not confusing anybody. I said lowest point before new high, lowest point before new high, highest point before new low, lowest point before the new high, highest point before the new low. The lowest point price got to before creating a new high, highest point price got to before creating what? A new low. So you understand why this point here, give me a minute. You understand why this particular point here now, this is our lower high and not this one. Why? Because this is the highest point that price got to before putting in a new low. This was the highest point that price got to. So this is not what, this is not a lower high. You definitely be mapping out what the highest point that price gets to before a new low, and you're mapping out what the lowest point that price gets to before a new high. So this is what our next lower high, and this is the next lower low. And price now retraced to put in what? A new high, right? That new high creates a low that takes out the previous low at this point. So this is what our lower low, the lowest point before a new high. And then that new high creates what? This low. This low goes ahead to what? Create this high, right? That high goes ahead to create what? To create this low. Until something very interesting happens in the market, which is when price now takes out a level of protection. At this point, price went ahead to take out the last higher low that we had. Price takes it out. I told you that your change of character looks like what? A break of structure to the downside and to the upside at the same time. Price takes that level out to create what? A new high at this point. This is what we call it. This is what we call a change of character. And I told you that this change of character usually comes with an unconfirmed change in the direction of price, which means that you now have to look out for another break of structure to confirm that price has finally changed its trend. Remember that we're coming bearish when that happened. And then what happens? Price now goes ahead to do what? To create a low at this point. After creating that low, it now puts in what? Puts in a new high at this point. It went above the previous high at this level. Automatically now, we have what? Resumed a bullish trend, right? We've resumed what? A bullish trend. Now that bullish trend goes ahead to what? Creates a new low at this point. This becomes the next what? The next higher low. That higher low creates what? A new higher high at this point. Now you can see that after this change of character occurred and the confirmation occurred, price started creating a series of what? Higher highs and higher lows, higher highs and higher lows, higher highs and what? Higher lows. The same thing that happened there. We're coming in a bullish manner. We're coming in a bullish manner here, and what happens? This change of character occurred, gave a confirmation at this point, and price started coming in what? Lower highs, lower lows, lower highs, lower lows, downtrend resumed until it changed character again and did what? Now resumed an uptrend movement. Higher highs, higher lows, higher highs, higher lows, right? Now again, if we continue like this until it changes character again, and then it resumes what? It resumes lower highs, lower lows, lower highs, lower lows with confirmation. So this is the series of movements that the market makes. You can see here again, this is still gold, right? Now here's what I mentioned when I talked about when price takes out an area of a level like this, let's say this is the point that this particular market trade started from. We have this level that is called what our higher low, and price created what a higher high, and then we have a higher low and a new higher high. This is the next higher low and what a higher high. Now at this point, the price goes below a previous higher low, breaks targets what a protected level, and like it just like breaks over to go the upside and to the downside. This is what the change of character looks like. But I told you that when you see this change of character, it's not like you just automatically now set your sell position to start selling. Instead, what are you going to do? You're going to wait for an extra break of structure to confirm that price has changed its previous trend to a new trend. Because sometimes it can be that price is just taking out that level to mitigate a level below and still continue. Like in this case now, you can see that after price took out this higher low, what did it do? It still went ahead to put in a new high, right? Continuing the uptrend. So if you were trying to sell from that change of character, you definitely take a loss, right? So for every time that you see a change of character like that, you don't just assume that the trend has changed like that. You need to see another break of structure to that new change before you confirm that the trend has changed. Because if you hop onto, let me say, price change character in a bullish trend, and you just hop onto to take a sell position, you most likely be stopped out. If price is just trying to take out liquidity from that low before continuing in that same direction, you most likely be stopped out. We've not done liquidity and reducement. I'm sorry, but I have to reference it when I'm talking about this. When we get there, you would understand better. Definitely, you would understand better, right? So now you can see that price now continued that same trend, after creating this higher high, it now came out to create this higher low, came back again to create this higher high, came back to create this higher low, came back to create this higher high. But there's something very interesting now happened again. What happened? Price did what? Price changed character by taking out this protected level at this point. Took out this protected level. Now I told you that when you see a change of character occur, what happens? You need to wait for a confirmation. Let me give you an example. Let's say you have a friend, and this your friend. Remember the example I gave earlier, where I talked about your friend being very loyal to you. Whenever you need somebody to talk to, you can just call them and they'll be there for you whenever you feel down, or even in places where you are not in. They'll show that person is speaking good about you and all of that. And then all of a sudden, like, you call this same friend. The friend is like, oh, please, I'll call you back later. The person is no longer available. The person is no longer there for you as they used to be. Like, the person has completely changed from what you knew them from. You know, it's very easy to say that, oh, this, my good friend, is now a bad friend, right? But you need to confirm that this person has actually changed. You understand? It can be that, okay, what if they have exams and that is what is sponsoring their unavailability? What if they have things going on with them? This person that used to call you all the time. What if the person lost someone and they are going through something, and that is why they no longer call you as often as they used to, right? So you need to confirm from them that, okay, what actually happened? Like, why did you change that? Have you really changed, or is something happening with you? Are you okay as well? Do you understand? That's the same thing on the chart. It can be that he does not want to sell. Do you understand? He just wants to take some money, some liquidity from a particular zone and still continue in your direction. But then you misunderstood it and you started selling in the buying market, and then you will lose money. Do you understand? You misunderstood that your friend and you cut them off, and then you lose a genuine friendship, you know? So things like that can happen at any point. Do you understand? So this change of characters, before you see that price has changed its character, you need a confirmation, which is another break of structure to the direction of that change of character, right? Now, in this case, we had this change of character, price taking out this level of protection, and it went ahead to do what? To give a confirmation at this point. by putting in what? A new lower high and a new what? Lower low. At this point, a break of structure has occurred. At this point, that your friend has said, yes, okay, that your friend that no longer used to go to, that doesn't go to attend lectures or anything. You go to class, that's the first person that you see in class. Like the person is now constantly coming to school. And you're like, you see that you have changed. And the person is like, yeah, this is the new me, this is that. Same thing on the chat. You no longer want to buy. Yes, this is now a selling, a downtrend. You understand? I think I'm tired of buying. I want to start selling now. That is what a confirmation of that change of character, an extra break of structure. And you can see that after that confirmation, what the price do? Price now started creating a series of what? Lower highs and lower lows, lower highs and lower lows, lower highs, lower lows, lower highs and what? Lower lows. It started selling, right? Most of the times, I'm telling you, most as in 70% of the times that you're going to see a change of character on the higher time frame, emphasis on higher time frame, right? A change of character occurs with a confirmation. It usually causes a change in the trend. If price was buying to start selling, if price was selling to start buying. That is why I said in the class that we had on Monday, I told you guys that market structure, understanding market structure, understanding how to map on market structure, understanding how not to mistake internal highs and lows with externals, understanding how to correctly say that this is what the higher low and this is the higher high has solved 60% of your technical problem when it comes to analysis. If you can just be in the right direction, the next problem is now where to enter from. Do you understand? Like, you already know that price is buying. The next problem is now when to buy. You know it's buying. Just when to buy, where to buy from. Do you understand? So, like, when you can be able to correctly predict the trend, it has reduced like 60% of the problems. So your major problem is now because of entries and what exits. Do you understand? And so this market research is not something that I want any of you to overlook. If you don't understand, continue asking questions in that question subtopic. Gather the question in your head. If it's not something that you can type, use voice notes, drop it there. Go to the chat, try to map it out. Like, you have to understand it. It's not something that you can bypass. This is not candlesticks. I just need to know bullish, bearish, this and that, and Buffett and all of this. This is market structure. Continue, right? It is a bit tricky, especially as newbies. You're just seeing these charts for the first time, but it is not something that you cannot understand if you consistently train yourself to see it. These things that you just become things that you recognize in a blink of an eye. If somebody wakes me up now to ask me, where is this thing going to? I don't need to spot out, like, mentally spot out my higher lows and my higher highs. You understand? If you look at this now, this is what? This is the lowest point that price got to before this new high. If you see, I didn't call this point my new high. Neither did I call this point my higher low. Why? Because when price created this high, when price created this particular high here, it has not, or it had not gone above this previous high. Right? This was the previous high that price created. So what? So this is not a higher high. Do you understand? This is not a higher high. And so since this is not a higher high, this is not a higher low. This was the new high at this point. So this low, this particular higher low is the lowest point before this higher high. This is not higher high. This is not higher low. But I can bet you that there are a lot of people that when mapping a structure will include this and include this. These are the little things that make you want to lose money when you start getting it wrong initially. Right? It is easy for you to take a change of character and get a change of character with not occurring. Right? So I think this is just like a basic chart walkthrough. I'm going to go back to the call. If you have any questions, just raise your hand up. Remember, your question should be related to what we're talking about. Akuna Kwe Chigozie, good evening. You can unmute yourself.
Yeah, good evening. Please, can you hear me?
Yeah, please go ahead.
Yeah, I wanted to ask, like, how significant must my problem is differentiating between the internal and external market structure. Like, how significant should it be for us to know that okay, this is external and this is internal?
It has to be significant enough. Let me show you something. They need to be, most of the times, you know what a pivot is, right? Like this. It's just like a V. Like this. It should create what? It should create a pivot. A low to a high to a new high. You understand? So it should actually give you a significant pivot. Let's go to the chart. Let me show you a significant one and the one that is low, that is not significant. If you look at what happened here, right? We have this pullback. Okay, let's say this one now. You can see that the distance between this and this is just like two candlesticks. Do you understand? So it's not really, let's say, buttressing on the point of a higher low and a higher high like that. Do you understand? But if you look at this now, four candlesticks created this pivot. You have 1, 2, 3, 4 before price created what? A new low. I mean the retracement move that created that lower high. 1, 2, 3, 4 candlesticks creating what? A new low. And you can see that significantly, you can say that well, this is a higher low and this is a higher high. This is very significant, unlike this one. So most of the times, let it be that the candlesticks that form with that lower high or that higher low is 4 and above. It has to be something significant. If it's like very small candlesticks, let it be up to like 4 and above, 3 to 4. I don't know if you understand what I'm saying. The person that asked that question. Okay, Chigozie or something. Are you clear?
Yes, ma. Yes, ma. Understand. Thank you.
You're welcome. Good evening, Anne. You can meet yourself. Please be as quick as possible.
All right, good evening, ma'am. So I just wanted to ask, please, can you go back to the chart, to the first place you marked the first break of structure, like where you started from?
Is it on this gold chart? Are you sure I did play it?
Yeah, the gold chart, like where you started, the first place you started marking from.
I would have most likely played it. It's not here anymore. But then what is the question about? Okay. Is it here? No. It's played.
No, it's not there.
Okay. AETFOO. You can meet yourself.
Okay. Good evening.
Good evening.
Please, I want to understand, like, when you're having a change of character, most times it starts from the lower time frame before it gets to the higher time frame. So you made reference to the change of character. So I want to know, you've been talking about change of character, break of structure and minor break of structure. So I want to know, you've done that mostly on the 4-hour time frame. I want to know exactly where you can know this or exactly the particular time frame that you be sure that this is actually a change of character and it's actually a confirmed one.
That's a very good question, actually. Let me just mute you so that your background I will mute you one of them. So here's the thing: when you're mapping out a market structure at any time, the market structure is what is going to give you direction as a trader, right? So which means that it is your market structure that will give you the signal of I'm buying today or I'm selling today. Which means that at no occasion, on no occasion would you settle for less. Settling for less in this case is mapping out your market structure on the lower time frames. Whatever is directing you should be from the higher time frames. I've taught a lot of people before now, and I can tell you that even the 1 hour time frame gets tricky sometimes. Whenever you're mapping out your market structure, I highly recommend the 4 hours time frame. The 4 hours time frame is just like a bridge between the 1 hour, 2 hour, 30 minutes and the daily weekly time frames. You understand? Majorly, look out for those break of structures, change of characters on the 4 hours time frame. That is the safest that it can get. You understand? If you go to the lower time frames, you see a lot of things going on in these internal structures, right? Like on a leg of a 4 hours higher low and higher high, you can have like 3, 4 higher lows and higher highs there on the 15 minutes time frame. And you don't want this noise to affect you. You don't want to be marking out internal highs and lows as externals. You understand? So you have to mark these things out on the 4 hours time frame. I don't know if that answered your question for that guy. For the rest of you, please, you can literally just drop your questions on the question sessions, right? Question session of that's the question subtopic. So that, but I'm seeing like a lot of hands up. So I'll be checking that out as I'm trying to answer some people here, right? In the next like 10 minutes, I would have to end the call, and then every other person will answer you on the questions. So you can just be typing as I'm talking. Good evening, Sam Branson. You can unmute yourself. Sam, are you there? Okay. No.
Yeah.
Good evening.
Yeah.
Okay. Go ahead.
Okay. So I have a couple of questions asked. First question is, how do you mark out micro and macro structures? Is it on a higher time frame or on a lower time frame? That is first question. Then second question is, does every trader has a time frame they mark out structures? Then the third question is, okay. I said I have 3 questions. I'll just rush and repeat the question. My first question is, how do you identify macro and micro structures on a? Then the second question is, does every trader has the time frame they mark out their structures on the charts? Mm-hmm. Then the third question is, can you buy or mark out market structure on a ranging market?
Okay. So on the ranging market, you know that prices, most of the time, when price pays this range, it is neither breaking out to the upside or to the downside. You understand? But internally, it can have things going on in those expansion, it's like expanding and retracing, but in the same level. You get, like I told you, I gave examples whereby we put people of similar heights in a room. They are jumping to the ceiling and falling back to the ground. They're not like jumping above. They're not getting higher than the ceiling level. Nobody is taking out the roof of the house to fly to heaven from the jump. You understand? They will jump to the ceiling and fall back to the ground level, jump up again. So which means they are expanding and retracing, but they have what? They have the same level that they are getting and falling back from. Do you understand? So you see those jumping movements and go up and down. You can have things going on internally. Like you can be having internal growth of structures, but on the 4 hours time frame, you are afraid that one thing is happening. That's one. Secondly, different traders have what they call their higher time frames. You know, we have swing traders, we have day traders, scalpers. There was somebody that I used to know that we used to scalp like very well back then. His higher time frame is 15 minutes. That is not something that you can try now, because that does not in any way have a very good win rate. Even in my own opinion, right? Let me say allegedly, because I know that there are few people that try to tell you that you can be very profitable trading 3 minutes and 5 minutes and the rest of it, right? And then at the same time, there are people that they don't even use these 4 hours. They go as high as using daily time frame, monthly time frame to map out their higher time frame bias. But I'm telling you, for the purpose of sample, you're focusing on the 4 hours time frame as your higher time frame. That is just like what? For day trading, right? I think that answers your second question. I think I missed out on the third question. So if you can repeat that, ASAP. Okay, I don't think it's here. We go please. I think that's the last question I'm taking in the call. Every other person, just start the question with the sample subtopic.
Good evening.
Yeah, good evening.
Yes, I wanted to ask, how does break of structure helps in confirming the change of character?
Okay. A break of structure is just like You know that I told you that in an uptrend, you have what, something like this. Price creating series of words, higher highs and higher lows, higher highs and higher lows, just like this. And then all of a sudden, price takes out, it breaks a lot of downside, takes out a protected level. And you are like, maybe this is a mistake, right? Maybe this is not really happening. Let's say that let's say this is just a mistake. It's not really happening. And then it goes ahead to do what? To now do it again. Meaning that the first one was not a mistake. It actually happened. He actually intended to do that. So it's doing it again. He's giving you that confirmation that what this is now a new trend. It's just like that's your friend that I gave an example of, right? And you're making excuses for them. You're like, no. I don't think that was their intention, right? They didn't do that to me intentionally. Maybe something happened. And then they go ahead to do it again, which has confirmed that the first one was not what a mistake. That is the same thing on the chart. When it happens the first time, the break of the price taking out to a protected level, break it out again, break it out to the downside. And I'm like, maybe just a liquidity grab, maybe just want to strip engagement and then continue to the upside. And then it goes ahead to break again to the downside. You're like, no, the first one was not a mistake, it was intentional. So now you have resumed a new trend to the downside, right? So that's the concept you can understand it with. Okay? So I think that's the last question I'll take on the call. Every other person, don't jump on the sample question book so that I don't do this thing. So that I know the class is not so long for people that would love to watch the recording. I'll definitely attend to every question on the question subtopic. So you can just like ask them. If you cannot type, you can drop your voice note. If you feel like I will explain better, I would understand better with that. Right? Thank you so much for joining the call, and I'll see you guys again